From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 8th, 2018. Today we're taking a look at the USDJPY, the US dollar, versus the Japanese yen. We're starting here on the daily time frame. Two different trends, of course, that we're looking at here. The blue trend line was the previous downtrend. The black trend line represents the current rising or uptrend here for the US yen. Within the uptrend, we have also, in the past week or so, pushed back above the 100 period simple moving average, the green wavy line that you see here on the chart. It was well underneath it during the blue trend line. Black trend lines started rising back to it, and now for the past week or so been sitting just above that 100 period simple moving average. So we're above that. We're above the trend line. All of that giving us an uptrend bias. Forex Black Book, by the way, is also green, giving us a bullish momentum bias as well. Let's go ahead and zoom it in here on the chart, and you can see this pattern within the trend where I have these boxes where the market would dip down, find support, bottom black box down here, yellow shaded area, found some support down there, started moving higher, went into a period of ranging and congestion again between the orange and the pink zone, bouncing around in there, broke out above the orange zone and went higher. Now we're in this box up here, top right hand corner of the chart, again above the moving average and the trend line, but the yellow shaded area 109.0 is the bottom of that yellow zone. So again, very similar to historical times. As long as it's above that yellow zone, and as it's above the support and 109 trend line and the moving average, we might have a better opportunity for going long. We've seen the US dollar improving quite nicely over the past couple of days, and of course that gives us some upside bias here as well. A little bit of a pullback here, maybe some of some concern, but at least at this point, we haven't been able to sustain any significant hold underneath the 109 level. So for the day today, as long as it's within and above that yellow shaded area, I would be more likely to trade the direction of the trend. Only if it breaks 109 does that begin to give us some concern about a change of the trend. Really, it would need to probably break under the pink zone, 108.45.65 before we really become concerned about the trend. But for the time being, the trend, the direction is bullish, and that's the direction we want to focus our attention and our efforts. Now, luckily, last week we took a buy, the first attempt, the first touch of the moving average and the trend line back here a few days ago. You can see that long going from 108.65 down here at the very bottom of the chart, currently sitting about 40 pips of profit. We've seen a little bit more than that. We've locked in, can't lose on the trade, so we've closed some of the profit locked in. So if you're not in there, you're looking for this yellow zone to hold support and the potential for it to begin to rise and go up again, sitting between 109 and 109.20. Let's go ahead and take it on down here to the 4-hour time frame, and as we can see, it's been having such a difficult time. Well, clearly it hasn't broken under the yellow shaded area in the past day or so. We've seen it challenging, we've seen it testing. Just look at the past 24 hours or so, just sitting above 109. So again, as long as it sits above there, there's the potential of the return of the trend, which is more bullish. Interesting here as well, Forex Black Book being green, we have a couple of green arrows. The green arrows indicate the buyers are trying to pressure this back higher, which is an indication of momentum shifting. So again, with the green arrows, with the support at 109, with the direction of the trend above the 100 period moving average, I believe it's still more of a long scenario than a short scenario. Now, I definitely would like to see it get back above 109.20. Getting back above there will increase our confidence. Another bullish run back above 109.20 will increase our confidence that we're looking for it to head back up to the blue shaded area. So what I'm looking for is some infusion of buy orders today. Back above 109.20 gives us the opportunity to see it back towards 109.70, 109.40, or 109.95, the blue shaded area at the top of the chart. And the risk at this point is the break of the yellow zone. Stop losses, of course, you'll have to work with your maximum risk, maybe underneath today's lows, maybe even as far down here as the 108.65 level. Again, stay within your maximum risk that you have for your trade settings, but somewhere either below today's low or the previous low all the way down here at 108.65 will be your stop loss, targeting the blue zone. Of course, if we could break that blue zone in the direction of the trend, likely to see it back into the mid to upper 110s for the US yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.